Hello, good morning and welcome to ET Now's the newspaper show with me, Varun Hiremat. Before we go any further, let me remind you that the newspapers are completely safe and all rumors regarding newspapers as a source of contamination for the COVID-19 virus are completely false. So if you are interested in getting your newspaper delivered to your residence, go to wantmypaper.com where you can explore all the options available for the same. With that, let's now move on to the top 10 stories of this morning. Checks on shipments to erect a wall against China. Finmin lists 14 indicators of economic recovery. Credit card spends back near pre-COVID levels. Rural India jobless rate down to pre-COVID levels as well. India to seek discussion on US visa suspension. Government plans customs duty on solar gear. Mumbai suburbs see 2,100 property deals in a month. Patanjali unveils COVID drug, government skeptical. RIL working to close the Aramco deal, says Ambani. And India to clear air on repatriation flights. Let's also get you a feel for the top 5 corporate stories of this morning, beginning with the fact that clearance delay may hit etailers. Disruption stumps electronics firms. Shared mobility firms see a weak recovery. Right time to cut dependence on China, says L&T. And Blackstone may sell 7% in Ambani REIT. Let's also get you the market stories. Bond sales by NBFCs double in Q1. SEBI relaxes ref issue pricing rules. FPIs pump in over 2,000 crore in the last 4 sessions. Wall Street gains, Nasdaq hits a new record high. And IRDAI brings out new draft COVID policy. So those were the individual headlines. Let's now move forward with our individual stories. Beginning with the fact that credit card spends are now back to pre-COVID levels. So India's dominant lenders in the consumer finance space have seen credit card spends inch closer to pre-COVID levels. Top lenders such as HDFC Bank, Axis Bank and RBL Bank are seeing the return of consumer spends to almost 80% of pre-lockdown levels in June. So 80% is a very healthy number. HDFC Bank sees monthly credit card spends of 15 to 20,000 crores. So that's quite healthy. Axis Bank has come out saying they're seeing a 75% recovery in credit card spends since Jan. And Axis Bank sounds a caution about the total revival at the same time. RBL sees credit card spends reviving by around 70 to 73% in the month of June alone. There'll be some other companies like SBI Card which are also impacted by this positive news flow. Okay, let's now switch gears a little bit. I believe my colleague Ajay is with us on the phone. Good morning, Ajay. Welcome to the show. The golden decade of Reliance. Do you want to walk us through what that means exactly?
The FY20 annual report of Reliance Industries, the stock which has created humongous value in the last 3 months alone, along with landmark deals, is out. And Mukesh Ambani clearly talks about the way the company is evolving right now. In fact, he goes on to say that intelligent harnessing of data is reshaping value creation. In a way, telling about how Reliance Industries is going about creating value for shareholders. They go on to say that RIL will achieve, it will be a golden decade for Reliance Industries the next 10 years. Much more value creation is likely to happen compared to last 4 decades, so last 40 years. That's a big remark coming in, saying that RIL will lead the nation in a digital format. He also says that the way the COVID impact, it was a black swan event and the company has gone about and managed it very well, becoming the second largest single country digital platform operator globally. Another thing which is important to watch out for is the clear mention that the company is in progress or processing the strategic partnership with Aramco. That's a clear mention. As far as retail is concerned, they clearly say that they are embarking on a journey to transform the way traditional retail has been done via the omni-channel route, and Jio will also play a very big part in that. and having become the fastest growing retailer in the world. Regarding Jio platform, this was the most interesting part of the entire annual report, saying that Jio platform is world's best technology ecosystem right now. And in fact, not only that, even Reliance as a holdco, there's a clear mention there that financially holdco is a very strong one and very attractive for future strategic partnerships. So there's a hint coming in over there. He goes on to say that Jio actually will create adequate shareholder value over the next several years. There's very clear mention out there. As far as refining business is concerned, they've admitted that refining sector again is going through a black swan, and the expectations of improvement in refining margins did not happen. So probably in the next coming quarters, it is likely to happen. Similarly for petrochemical also, the business which saw some headwinds, they have mentioned that improvement in demand is likely to happen in the second half of FY20. So regarding all the businesses, there's a very clear assessment of current situation and what lies ahead. But there was very interesting value creation, shareholder value kind of mentions, especially in retail and Jio segments of the annual report.
All right, thanks for that, Ajay. Let's switch gears a little bit to the jobless rates. And India's unemployment rate has returned to the pre-COVID level of 8.5% from the peak rate of 23.5% that was seen in the months of April and May. Now, this is obviously due to the nationwide lockdown, which led to a job loss for millions of people. However, urban unemployment at 11.2% continues to be higher than the pre-COVID levels. So in urban areas where the mass of people are employed, the situation has not improved. Recovery in rural sector is due to demand for labor for Kharif, sowing, which has been good because of the monsoon, and the government's emphasis on NREGS to employ returned migrants. So that'll be a key thing to look out for going forward as well. Okay, Poonam's now with us. Good morning, Poonam. Welcome to the show. It seems the FinMin has listed 14 indicators of economic recovery. Could you tell us a little more about them, please?
Oh, yes. In fact, if you look at the high-frequency data across agriculture, manufacturing, as well as the services, we are certainly seeing some amount of green shoots in terms of the economic revival. In fact, if you look at the agriculture sector, the wheat procurement has been at a record high. Tariff sowing is up nearly around 40% by June of 24th. Fertilizer sales are up nearly around 98% in the month of May. If you look at the manufacturing data, electricity consumption is seeing lower contraction. Till around June 21st, the contraction has been at 12.5% versus a contraction of 24% in April. If you look at the accessible value of e-way bill generation, it's at nearly around 9 lakh crore in the month of May versus a 4 lakh crore in April. But do note that this certainly is lower on a YOY basis, and also if we compare it to the pre-lockdown period. Services sector also, we're seeing some amount of green shoots there. Petroleum product consumption contraction has declined in May. Railway freight traffic is up at around 8.26 crore ton in the month of May. Electronic toll collections have improved. NPCI digital transactions are picking up. Average mutual fund AUM also is picking up, and private placement of corporate bonds is certainly picking up. And we already have seen that the forex reserves have hit a record high recently. So yes, some amount of green shoots in terms of the economic revival are certainly there. And as FinMin is pointing out that government as well as RBI prompt measures are certainly helping revival and leading to some amount of minimum damage in terms of the economy.
All right, Poonam, thank you so much for bringing us those details early this morning. Now, the next two stories are a little bit of a geopolitical base, so bear with me. Reports suggest Indian customs could carry out 100% checks of Chinese import consignments at ports on the back of the heightened security concerns following tensions at the border. So checks on shipments to erect a Great Wall against China goods. The industry fears that the move could delay the import of key components for some of our local industries. Customs could carry out 100% checks of Chinese consignments at will. And Chennai, one of the first ports for such closer scrutiny. So they'll be seeing all this happening first. Coming back to India and Pakistan, India has announced reduction of staff strength in the Pakistan High Commission here by 50% and will reciprocally reduce its own presence in Islamabad to the same proportion amid reports of increasing espionage activities by the Pakistan mission and harassment of Indian diplomats in Islamabad. So that's quite a negative piece of information coming in. This is from the Times of India, page 1, so do have a read. High Commission staff is to be reduced by 50% in both the countries. The decision reminiscent of 2002 when India had taken a similar step. 7-day deadline issued to implement the decision. Decision is triggered by espionage reports and Pakistan not in conformity with Vienna Convention, says the MEA. So two interesting ones on that front. But let's now cut across to Utkarsh, and it seems that the US has issued a notice calling for approvals to operate any charter flights to and fro from the country. India is likely to explain to the US that services being operated by Air India under the Vande Bharat mission are repatriation flights and not normal commercial ones. Utkarsh is getting us more details on this now.
Exactly. So as you said, Varun, what has happened is that in the Vande Bharat flight now, the American carriers want a share for it. And that is precisely the reason why now the US government has said that they will allow the Air India flights after, enough scrutiny. In fact, what came from US is that India has impaired operating rights of US carriers and has engaged in discriminatory and restrictive practices with respect to US carriers services to from and India. In fact, it's not only US, but European Union also, which we have learned, has initiated talks with India to allow its carrier to resume scheduled flights from, to, and from India. Now, that is something which, is, as you said, the Indian government stand is that these are not regular flights. These are flights which are only meant to rescue people who are stranded. But again, there has been a building pressure given the number of these flights which are taking place now at this point of time, and that is why India has also thinking of starting meetings with American American associations and European associations to go ahead and start the flights and create a bubble in a sense to once again start the international flights in a very limited manner. But again, this will take time. Until then, US is really trying to get a share of the Vande Bharat flights as well.
All right, Utkarsh, thanks a lot for bringing us that update from the aviation sector. Let's switch gears a little bit to real estate. My colleague Vivek is now with us. Good morning, Vivek. Welcome to the show. Economic Times page 6 indicates that property deals have really started to pick up in Mumbai, and there's really been a sharp turnaround. Could you walk us through the numbers, please?
Well, absolutely right, Varun. So, when you spoke about the entire lockdown, both property deals, releasing rental agreements, all of which are sources of revenue as far as the entire department is concerned, came to a complete virtual standstill as well as a halt. However, what is encouraging is the fact is that both real estate deals in the city as well as the suburbs have seen a significant amount of pickup, and this is something that is quite encouraging. Now, in fact, what they are saying is that the pickup is something that is quite better than they actually anticipated. So most of the deals are actually releasing, and some new transactions have taken place as well. Now, what is interesting to see, and we will need to slice and dice the data a little bit more as and when it comes, is that whether there are any residential transactions that have taken place. Now, remember, if residential transactions have taken place, it basically means that some of the properties or some of the idle inventory that is lying is actually being pushed onto the market at rates that are quite affordable as far as the home buyers are concerned. So it'll be interesting to see whether this particular trend continues or whether the increased or more than anticipated increase in demand is mainly due to the lockdown, and we're just seeing some amount of earlier deals that were pending now onto the market and being completed.
Right, Vivek. Thanks so much for getting us that update, and we're all really hopeful that the market turns around. But for now, looks like these properties will be going at some kind of discount, even if they do. Okay, coming to the insurance space, Times of India, business page 13. Insurance regulator IRDAI has directed life and non-life insurance companies to introduce a short-term COVID-19 health coverage. The directive comes at a time when infected cases have crossed the 4.4 lakh mark in the country and dependency on private healthcare is expected to increase significantly. Okay. Also, if you go to ET's page 9, the Ministry of Road Transport and Highways is likely to cancel the bid submitted by a Chinese firm for execution of a stretch on the Delhi-Mumbai expressway. Separately, 2 other bids submitted by Malaysian companies for highway projects are also being reviewed. This comes ahead of the changes in the highways construction policy to promote local players as a part of the government's Atmanirbhar Bharat mission to make India more self-reliant. So it'll be interesting to look out exactly who gets these projects. Do have a look. Okay, I think we're now going to look at an outbreak report that came from the Times of India. And according to the newspaper, India will hit a peak of 2.6 lakh COVID-19 cases, active cases mind you, on July 15th. I think that's the highest we'll have seen till date, as per the most likely scenario. As per the July projections, the peak active cases could hit 3.9 lakh on July 25th. Now, these are all projections, obviously. The researchers have been tracking the coronavirus pandemic in India for the past several weeks, and this report has actually achieved an accuracy rate of 96% so far. So if you look at the number, we should be fairly close based on the fact that they've been very accurate in the past. Overall prediction level is 92%. So let's see what happens. July 15th is it's less than a month away now. And it'll be interesting to see. In the first week of July, they're expecting 47,000 active cases. So we'll be updating you on that with our regular COVID corner. Let's quickly also do the top 5 from the Times of India this morning. Beginning with India, China agree on gradual disengagement. India downgrades Pakistan ties, halves mission staff. Mumbai region cases top 1 lakh, and that's 73% of the Maharashtra count. Color codes likely for desi and foreign products. And in a first, diesel costlier than petrol in Delhi.